Welcome back to the Financial Evangelist podcast, where we try to wrap our heads around the latest financial news and trends. And today we're diving into something that's been on everyone's mind, and that's government intervention in the economy. And specifically, we're going to explore tariffs and the big debate around stimulus spending. So to help guide us through this, I've gathered some insights from three really interesting sources. We've got Rebel Capitalist, known for their libertarian take on economics, Eurodollar University, who offer like a really deep dive into global monetary systems, and Stephen Van Meter, who keeps a close eye on market trends and economic data. So are governments actually steering us in the right direction, or are their actions creating like a whole bunch of unintended consequences?
Well, let's dive in and find out. We'll start with tariffs, those taxes on imported goods that always seem to be making headlines. Now, on the surface, tariffs might seem like a pretty straightforward way to protect domestic industries, but as Rebel Capitalist points out, they can actually lead to some pretty surprising outcomes.
They highlight the recent example of Canadian liquor stores pulling American alcohol brands like Jack Daniel's off their shelves in response to U.S. tariffs. It feels like a classic case of, an eye for an eye, but it actually ends up hurting businesses on both sides of the border. American producers lose a key market, and Canadian retailers have to scramble to find alternatives. And that's just one example. The real concern with tariffs is their impact on these really intricate global supply chains that have become so essential to modern commerce. Even like a small change in tariffs can trigger this cascade of adjustments, making it incredibly difficult for businesses to plan and invest for the future. And this uncertainty, this can ripple through the entire market, making investors hesitant and potentially stalling economic growth. So while tariffs might seem like a simple solution at first, their effects are anything but straightforward. And speaking of unintended consequences, Stephen Van Meter brings up a point that hits close to home for all of us: the impact on consumers. He highlights how even Costco, a retailer known for its low prices, is warning that tariffs will force them to raise prices on everyday items. And this is a big deal, especially with inflation already putting a strain on so many household budgets. It makes you wonder if the potential benefits of tariffs really outweigh the costs, especially for those who are already struggling to make ends meet. So tariffs, they're clearly a double-edged sword. They can be a tool for negotiation and protection, but they can also create unintended victims and fuel economic uncertainty. Understanding these nuances is crucial, especially as we navigate this increasingly interconnected global economy. Now let's shift gears and talk about another powerful tool in the government's arsenal: stimulus spending. We're going to use Germany's recent announcement as our case study here, drawing on insights from Eurodollar University. Germany, facing a sluggish economy, has decided to inject a massive amount of money into their system, what some are calling a bazooka approach. The idea is to boost their defense capabilities and revitalize key industries with the ultimate goal of jumpstarting growth and creating jobs. On the surface, it sounds like a pretty sensible plan. But throwing money at a problem always guarantee a solution? That's the big question that Eurodollar University raises. They point out that while these large-scale stimulus packages often trigger a short-term reaction in the markets, bond sell-offs and stock fluctuations, those initial movements don't always translate into sustainable economic growth. In fact, they highlight examples from both China and the U.S. where massive stimulus efforts failed to deliver the promised results. The money was spent, debt increased, but the economic boost remained elusive. So what happened? Why didn't it work as intended? Well, Eurodollar University dives into this key concept known as the fiscal multiplier. This measures how effectively government spending translates into actual economic activity. And what's fascinating is that this multiplier is often less than 1, meaning that each dollar spent by the government generates less than $1 in economic output. So where does all that money go? That's a question that deserves a closer look, and we'll explore it further in the next part of our deep dive. But first, let's connect this back to your personal experiences. Are you feeling the benefits of these stimulus efforts? Or are you, like many Americans, struggling with rising prices despite the government's attempts to boost the economy? Stephen Van Meter raises this crucial point, highlighting the disconnect between the official narrative and the reality on the ground. While government reports might paint a rosy picture of job creation and economic growth, many people are finding it harder to afford basic necessities like rent, food, and energy. And if we look closer at the job market, rising unemployment and a shrinking labor force paint a less optimistic picture. It seems that stimulus spending, while potentially a powerful tool, is not a guaranteed solution. It requires careful analysis, thoughtful execution, and perhaps most importantly, a clear understanding of the potential downsides. So we've covered tariffs and their potential to backfire, and we've started to unpack the complexities of stimulus spending and its mixed track record. But there's another layer to this story, a layer that goes beyond pure economics and delves into the realm of politics. We'll explore that in the next part of our deep dive. Stay tuned as we uncover the political motivations that might be driving these economic decisions. So we've talked about how tariffs can sometimes backfire and how stimulus spending doesn't always live up to its promises. But what happens when governments try to juggle both of these tools at the same time? I mean, it's a scenario that's playing out right now in many parts of the world, and as you might imagine, it's creating a lot of uncertainty. Rebel Capitalist paints a really vivid picture of the current trade war situation, highlighting this constant back and forth, the announcements and delays, the tweaks and adjustments. It's like trying to follow a complex chess match where the rules keep changing in the middle of the game. And this uncertainty, as they point out, has a real impact on markets and businesses. Every headline about potential tariffs or new stimulus measures sends shockwaves to the system. Investors react, stock prices fluctuate, and entire industries brace for impact. It's this volatile environment where it's really hard to make informed decisions, especially for long-term investments. But beyond those immediate economic impacts, there's also this broader concern about the erosion of trust and the breakdown of global trade relationships. When countries start throwing up trade barriers and engaging in this tit-for-tat economic maneuvering, it can really damage the delicate fabric of international cooperation that has fueled global growth for decades. Yeah. And it's not just about abstract economic concepts either, right? Real people are affected by these decisions. Rebel Capitalist brings up the example of the CEO of Brown-Forman, the company behind Jack Daniel's, who expressed frustration about Canadian stores pulling his products off the shelves in response to U.S. tariffs. He called it a disproportionate response, but from the perspective of those Canadian retailers, it was a necessary business decision to protect their own bottom line in the face of these changing trade dynamics. It's a reminder that tariffs, while often framed as a way to protect domestic industries and workers, can end up hurting the very people they're supposed to help. In this case, American producers are losing sales. Canadian retailers are facing disruptions, and ultimately consumers on both sides of the border might end up paying higher prices. And this pattern isn't limited to the U.S. and Canada either, right? The retaliatory tariffs that Canada imposed in response to the U.S. measures targeting everything from orange juice to motorcycles illustrate how quickly these trade disputes can escalate and how difficult it can be to unwind the resulting damage. So we've got tariffs creating uncertainty and disrupting supply chains, and we've got governments pumping trillions of dollars into the economy through various stimulus programs. It's a lot to digest, and as Eurodollar University suggests, it might actually be creating more problems than it solves, especially in the long run. They argue that this bazooka approach to stimulus, while perhaps offering a temporary sense of relief, can actually hinder long-term economic growth. Instead of addressing the underlying structural issues that might be holding an economy back, they suggest that these massive spending sprees create a sort of artificial sugar high, masking the real problems and delaying the necessary adjustments. They even introduced the concept of negative multipliers, suggesting that in some cases government intervention can actually have a detrimental effect on economic output, leading to less growth, not more. It's a provocative idea that challenges the conventional wisdom around stimulus spending and raises some important questions about its effectiveness. Now, I'm not saying that all forms of government intervention are inherently bad. There are certainly times when targeted spending or strategic trade policies can be beneficial. But as Eurodollar University emphasizes, we need to be cautious, thoughtful, and data-driven in our approach. Throwing money at a problem and hoping it goes away is rarely a sustainable solution. So far, we've explored the unintended consequences of tariffs, the mixed results of stimulus spending, and the dangers of using both tools simultaneously. We've seen how these actions can create market volatility, disrupt global trade relationships, and even harm the very people they're intended to help. But there's another crucial layer to this story, one that goes beyond pure economics and delves into the motivations behind these decisions. So we've been digging deep into this world of tariffs and stimulus spending, and we've seen how these economic tools can have these unintended consequences, and they don't always deliver the promised results. But as we wrap up this deep dive, there's one more crucial aspect to consider, and that's the political motivations that often underlie these decisions. I mean, let's face it, economics rarely exists in a vacuum, right? There's almost always some kind of political angle, a hidden agenda, or at least an attempt to shape public perception alongside any major economic policy. And that's where things get really interesting. Rebel Capitalist touches on this, suggesting that some of these recent trade war tactics might be driven more by, ego and political maneuvering than by sound economic principles. Think about it for a second. Politicians are always under pressure to show results, to project strength to appeal to their base. And sometimes a tough stance on trade or like a big splashy stimulus package can be more about scoring political points than about creating sustainable economic growth. It's kind of a cynical view, but it's one worth considering as we try to understand the forces that shape our economic landscape. Eurodollar University offers a really fascinating example of this political dynamic at play in Germany. They point out that the German government, long known for its fiscal conservatism, has essentially been forced into this corner of massive spending by a combination of economic pressures and shifting political winds. The voters are demanding action, and the government is feeling the heat. So they've rolled out this huge spending plan, framing it as a necessary investment in defense and economic revitalization. And by linking the spending to national security concerns, they're cleverly appealing to public anxieties and making it harder for opponents to criticize the plan without appearing weak or unpatriotic. It's like a classic example of how political calculations can influence economic policy, even in a country known for its, prudent financial management. And of course, this dynamic is also at play in the U.S., right? Stephen Van Meter highlights how the current administration, facing criticism for rising inflation and a weakening economy, is trying to control the narrative by emphasizing deregulation and painting a really optimistic picture of the future. But as he points out, the data tells a different story. While officials are touting job creation and economic growth, many Americans are struggling to make ends meet, facing higher costs for everything from groceries to gas. There's this disconnect between the political messaging and the lived experiences of so many people, and it highlights the importance of looking beyond the headlines and digging into the data to understand the real impact of these policies. And let's not forget about the Federal Reserve, who are constantly under pressure from all sides. They're trying to balance inflation concerns with the need to support economic growth, and every decision they make is scrutinized, analyzed, and often politicized. It's a really tough balancing act, and it's easy to get caught in the crossfire of competing interests. So what do we learn from this deep dive into the world of government intervention? Well, we've seen that tariffs can backfire. Stimulus spending doesn't always work as intended, and political motivations often play a significant role in shaping these decisions. But perhaps the most important takeaway is this. As individuals navigating our own financial journeys, we can't just sit back and assume that the government has everything under control. We need to be informed. We need to be critical thinkers, carefully evaluating the data and understanding the forces at play. We need to be prepared to adapt to a changing economic landscape and make smart decisions that protect our financial well-being, regardless of the political winds that may be blowing. So keep learning, keep asking questions, and remember, the more you know, the better equipped you are to navigate this complex world of finance and economics. That's it for this deep dive. Thanks for tuning in, and I'll see you next time.
Tired of spending countless hours sorting through your crypto transactions? Meet Coinly, your all-in-one crypto tax solution. Whether you're trading, staking, or mining, Coinly automatically imports and categorizes your transactions from over 700 exchanges and wallets. Generate accurate tax reports in minutes, track your portfolio performance, and stay compliant with your local tax authorities. Coinly supports tax regulations in more than 20 countries, making crypto tax season stress-free for investors worldwide. Join over 1 million users who trust Coinly with their crypto taxes. Visit the link in the description to get started today and receive 20% off your first tax report.